You Bid Me Up is the song that comes to mind. You say they wouldn't dare add any more. Well, wouldn't dare. But you don't think that they're going to add more than the 400 million barrels because of Saudi caution. Good morning, Amrita. What would it take to stir His Royal Highness to add more than the 400,000 barrels at the moment? Good morning.
Morning, Manus. I didn't say the word dare. Don't put words in my mouth. But no, I think, look, right now there's still caution. The caution is the reason for that. We are coming into winter. There will probably be COVID flare-ups. More importantly, what you're seeing right now, oil being pulled up, the biggest reason it's being pulled up is because of gas prices. This is very much the fallout of the energy transition policy of the West. Saudi Arabia knows this very well. My conversations with them suggest that they're keenly following this right now, but they're very aware of the fact that they've been calling for, look, we need more investments in oil and gas. Demand isn't falling anytime soon. But the Western world policy of climate change has meant that supplies have fallen far quicker than demand. And this is the very first of the inflationary impacts we are seeing of transition. There's going to be a lot more to come. So this is a wider issue. Adding more than 400,000 barrels per day is not going to necessarily solve the problem right now. And also, a lot of the longevity of gas prices through this winter will depend on the weather. So I'm not saying that they're not going to add more than 400,000 barrels per day down the line, but for today, we think that's unlikely.
Okay, fair enough. So down the line, is it going to be just these macro pressures, Amrita, or is there any price that crude could surpass that in itself would pressure OPEC to more quickly add barrels online?
I would say don't focus on the price of crude, focus on the volatility. Saudi Arabia is very, very keen to reduce volatility, both on the upside and on the downside. I think that's the key. If suddenly prices spiked for whatever reason, cold winter or otherwise, because underlying the oil market, inventories are super low everywhere, and that does lead us to the possibility of price spikes for any outage, then they will be very quick to react. We are still within a range. Remember, this time last month when we were speaking, prices were at 65 and everybody was asking, oh, are they going to cut? Are they going to pause? We are still within a range, right? We're within that kind of $70 to $80 range. As long as we're within that, the urgency to act beyond what is required from the current deal is limited.
I caught up with Secretary General Mohammed Barkindo last week, Amrita. I've got to say, that man gets an Oscar for sometimes talking to me and not giving me an answer. But he said it was going to be a bumpy ride. But I want to get your view in terms of the oversupply. We're caught in this eye of the storm. Jeff Curry talking about 10 years underinvestment, another $10 higher. Bank of America are at $100 oil. But you say we're going to go into an oversupplied market in 2022. Is that one of the things that will hold OPEC Plus in restraint? And if so, how oversupplied will we be?
So that's not our view, that's OPEC's view. So if you look at OPEC Secretariat's view, they are saying we are going to be in an oversupplied market next year, which is another reason why the OPEC Plus ministers are going to be pretty cautious. We've been bullish way before the banks turned bullish. I mean, we've been talking about $100 oil for next year or late next year into 2023 for well over a couple of years, precisely because of underinvestment. And that's not something new. If anything, the banks are coming around to what we've been saying for a while. But I think what's critical over here is that the JTC, the Joint Technical Committee, came out even what was 2 days ago saying, look, we are still expecting 1.4 million barrels per day of oversupply next year. If that's the case, that makes it very difficult for OPEC Plus ministers to add barrels to the market right now.
Right, and you write about how OPEC has this view that they're not going to reach peak oil in the next 25 years, and that's not necessarily what you're seeing. So what is OPEC getting wrong in this forecast?
So for us, I think the critical thing is that we do think oil demand is going to start peaking. But when we talk about oil demand, it's transportation demand, right? Gasoline, diesel, late 2020s, early 2030s. But if you look at total liquids, that still continues to grow into the mid-2030s. Then it starts to peak. OPEC, in their kind of long-term report they pushed out last week, they don't see a peak till the in the horizon of 2045, oil demand doesn't peak. I would say that, look, given everything we're seeing with regards to efficiency, with electric cars, there is going to be a push that will plateau oil. Now, what I will say, though, is it is incredibly hard to get oil demand below 100 million barrels per day. Our peak is about 107. It comes back down towards 100, but it doesn't fall below that. So, yeah, we're not aligned in the fact that we do see a peak and it comes down, but I will really warn that it doesn't come below 100 million barrels per day, which means we absolutely need to get investments. Otherwise, we are going to keep getting very high oil and gas prices.
Yeah, I just wonder how much of the spare capacity that Citigroup or that Citi talk about is deliverable. Amrita, can we pivot to gas? Danny and I started the show talking about gas being the equivalent of $190, and that's got a big economic impact. How tight is the gas market, Amrita? How under-reserved are we? And what's next in that market, in that story?
Yeah, it's a fascinating story, isn't it, Manas, right now? I mean, look, the biggest story is Europe. European stocks are low, mainly because Russian exports have been low. Russia's own demand has been very, very strong this year, so they have to refill their own inventories. Of course, there's Nord Stream 2 that should start up next year. We are expecting more flows from Russia next year that should ease prices off. However, this again goes back to the very first thing we were talking about. It's energy transition. We are retiring coal plants before overall energy demand has fallen, or at least demand for fossil fuels has fallen, which means now gas is being called as baseload. So structurally, we think this is a higher gas price environment. Yes, prices will come off current levels, but they will remain much, much higher than we've seen in the last 10 years. That's the new reality of it. And if there is a cold winter, prices are going to go much higher. And just on Friday, China came out and said, buy at all costs. They are not going to tolerate blackouts. I think this is the crux of it. We are going to have to make choices between economic growth and climate change. And I think that's why we should stop demonizing fossil fuels.